When Europe's last great conflict occurred, there were no cryptocurrencies. Nowadays, alternate modes of exchange enable individuals, corporations, and even governments to move their funds, investments, and deposits. Even though cryptocurrencies are incredibly volatile, they have a number of advantages to offer. Cryptocurrencies operate beyond governments' radars, are semi-anonymous, cross borders, and exist in virtual worlds. A computer wallet can store a little or a large amount of Bitcoin, Ethereum, or a variety of other cryptocurrencies. And this makes a crypto an ideal choice for mode of payments and storage of value. Welcome to Hodl Mind. In today's video, we will discuss how wars and inflation might affect the cryptocurrency industry and its long-term consequences. Immediately following the Russian invasion of Ukraine on February 24, the Bitcoin market fell. Bitcoin futures for March plummeted to $34,300, while Ethereum futures for March slid to $2,305. More than 60% of the entire value of the asset class is held by the two most popular cryptocurrencies. Even though the war began with a decrease in Bitcoin and Ethereum's prices, they have since rallied as the hostilities have continued to escalate. The United States and Europe imposed sanctions on Russian banks and enterprises as retaliation for the assault, and the Russian stock market and the currency both plummeted as a result. The use of cryptocurrency by some Russians and others leaving war-torn Ukraine may be a boon in the near future. There are more than 18,000 different cryptocurrencies that might become popular assets if the battle extends, fueling the bullish trend that ran into an impenetrable barrier of dumping after the most recent highs in mid-November 2021. The idea behind cryptocurrencies is that money should not be controlled by the government or the central bank. But governments control the money supply because they create legal tender, which makes it easier for them to dictate the economy of their countries. The rise of the crypto asset class and its ascension to all-time highs in November 2021 has not been welcomed by governments. In contrast to El Salvador, several nations have not embraced Bitcoin as their official currency. There are international agencies like the World Bank and the International Monetary Fund, which lend money to governments throughout the world, that have a negative view of crypto assets. Cryptocurrencies, on the other hand, might be a viable option for governments that have become pariahs on the global stage. Both Coinbase and Binance, two of the world's largest cryptocurrency exchanges, rejected requests last week to exclude all Russian customers despite Western sanctions on Russia. Kraken, a different exchange, will not terminate Russian accounts. Exchanges, meanwhile, have barred the accounts of Russian clients explicitly sanctioned by the West, including the mega-wealthy Russian oligarchs. Banks in Russia who have been banned from using SWIFT are likely to look at the crypto market as a replacement for that system. Many analysts, on the other hand, feel that cryptos will not be able to assist Russia in avoiding sanctions since the asset class is too tiny for the country. All governments believe that if cryptos continue to expand at the rate they have been in recent years, they might constitute a concern. For Ukraine, on the other hand, cryptos have been a lifeline. Since the Russian invasion, Ukraine's government has received millions of dollars in Bitcoin donations. To escape sanctions, the Russian government and its network of billionaires may not find cryptocurrency assets liquid or totally anonymous. Refugees fleeing for their life, on the other hand, may simply carry Bitcoin, Ethereum, and other prominent cryptos that provide liquidity when ATMs and banks become inaccessible. There is a possibility that people in other former Soviet satellite countries, such as the Baltics and Eastern Europe, would turn to cryptocurrencies as a kind of escape money while it is too late for Ukrainians. As a result of seeing the Russian invasion, many in the region are likely to begin preparing for the same fate. Refugees who have no choice but to flee for their lives could keep cryptocurrencies on a flash drive or in their pockets sewn into their clothes. Cryptocurrency owners face a serious threat to their safety. Even a single hacker or government-sponsored hacking may cause a lot of damage to crypto accounts. In 2021, North Korean hackers stole digital currency worth about $400 million, according to a BBC investigation from January. Microsoft caught 58% of all state-sponsored hacking in October 2021, according to Fortune. A growing number of countries are using hacking as a weapon of war in virtual worlds. Many did not expect that the world would be confronted with Russian aggression, which resulted in the greatest European exodus since World War II, just a few short weeks ago. As a result, the world is now on the verge of a nuclear confrontation. The economic and geopolitical environments are reflected in the markets. More than 4 decades ago, inflation was at its peak level. Sanctions on Russia by the United States and its allies are adding gasoline to the inflationary fire already blazing in Ukraine. Markets in all types of assets have become more volatile because of uncertainty, which makes prices go up and down. Biden issued an executive order on March 9 to ensure responsible innovation in digital assets. Order welcomed the rise of digital asset class and cryptocurrency asset class growth. The order noted some important points, such as protecting U.S. consumers, investors, and businesses from systemic and other risks, protecting the U.S. and global financial stability, supporting technological advances and responsible development of digital assets, and exploring U.S. central bank digital currency. Cryptocurrencies, a new and growing asset class, have seen huge price fluctuations. War and inflation may only force governments to tighten the regulatory noose, increasing the ideological argument for the asset class, even though the trends in Bitcoin, Ethereum, and the other over 18,000 cryptocurrencies remain negative since November 10 peak. There will be a lot of turbulence in the cryptocurrency market. Cryptocurrency might be closer to the bottoms than the heights since it is safer than fiat currencies or other assets that have soared to unreachable levels during the previous several weeks. Geopolitical uncertainty has caused many investors to lose trust in their governments, which may make the security and custody difficulties worth it for certain investors. If you think about it, Western sanctions on Russia and the war in Europe should be good for the cryptocurrency asset class. And the U.S. executive order is an attempt to regulate and manage the asset class. But the fundamental concept promotes people instead of governments. It will be up to time to see if the theory leads to another big rally. Thank you for watching.